Hi and welcome to the Big Picture. This is Kim Watson speaking. Now with this Big Picture videos, I missed a couple of weeks. I've been moving and been very busy at different things. Now, and one of them I'll tell you later on. But before that, wanted to sort of clarify what this Big Picture video is about and who may appreciate it. But I would like feedback as well, because whether to pursue and continue, whether you really want to see this sort of analysis. This analysis basically looks across the board. It really looks what the banking sector doing. Sorry, I can't write with this bit of software because it hasn't got. It won't allow me to do it with my pen, so I'm having to do it with a mouse. So if you can make that out as banking, it's looking at what the banking money is, and then I'm going to try and get another B in there. There's a big B there, and then looking at the big money, and looking at what the big money is doing. This is really where I'm focused on here, and of course behind all of this is, believe it or not, is those fundamentals. I'll just leave it F. Because that's what drives the big banks, and the big banks are effectively those fundamentals. The big money will be looking at those as well, because they'll be reacting or trying to pre-react to what the banks may do. So the banks may affect the big money, but the big money themselves are thinking, well, actually I'm looking at those as well because I know what they're going to be talking about. We can look at what guidance the big banks give us, and then we can make decisions accordingly. And this may well set the bigger trends. I can show you plenty of currencies where the big money has started changing direction, and so funny enough as the markets, and the big money is changing direction because they can see ahead of time ahead of the banks, the necessary comments of what may be said. Now, this is the intention behind this analysis, is to look at this. It gives us an idea. If we can be on the side of these guys some of the time, we won't always be. We'll be trading against them at times, but on the shorter terms, particularly the daily point of view at times. However, if we're sort of got a bias, then and apply that bias to some of our trading, we got a better chance of maybe catching some of the bigger moves and certainly the direction. So that's the basis behind this. Do let me know what you think, and also put a thumbs up if you like it, because I can then realize it's worth doing, basically. So I'm going to start off. I'm looking at a dollar index here because I really want to talk about the US economy and where we're sitting with that. Well, the US economy, and so as some others, are sitting there, and I think they're quite stagnant or getting that way. There are signs that, okay, the US economy is still showing growth. It's not what it was. It's slowing. The concern is it could stagnate. Yes, we may get a bit of a drive as we push through the current weeks, particularly with Black Friday coming up next week, and etc. It may be the driver, but we'll see as we progress with this. But as I said, in the main, the numbers are quite flat. The central bank have put out there, and a lot of people have said there's very unlikely to see any further interest rate movement. Particularly, we won't see any rises, and they're even talking about letting inflation rev up a little bit before they talk about increasing interest rates. So inflation may go over target eventually before they start doing something. So they're going to be slow in reaction to the any upside there. Now, so what's that mean? Well, okay, we already really knew that the chance of interest rates being changed either upside or downside now are pretty slim. The downside, well, it's always it's probably more potential of that happening than an upside in the next year, basically. Big thing that's on there, of course, is the negotiations with China, and those trade negotiations are affecting so many countries and so many of these major currencies as we go through here. But it's a real knock-on factor. People talk about Brexit and sort of like to palm one off on that quite a lot in terms of these. Yeah, sure, I'm sure it's had a knock-on effect, and certainly in the UK economy, etc., it's had a knock-on effect. But you cannot underestimate this Chinese/US trade talks, and if there's some sort of good resolution, it'll be interesting to see what the markets do. But for now, we as I say, slightly stagnant. Looking at the numbers actually coming out this week, this is all the major data coming out this week. Really, the things to watch is the FOMC meeting minutes on Wednesday evening, and then we've got the ECB data on Thursday midday, and then the most important thing I think of the week is the new ECB president coming in there. So they're the big things coming in, and then of course the main data is on Friday. So it could well be a very quiet week up until Lagarde talks later. In US terms, I don't think those FOMC minutes are going to particularly do too much, because it's all out there effectively. It's been spoken. We've had a lot of speakers. I don't think there's going to be much of a surprise. On that basis, technically, where are we sitting here then with the bank? And the bank is, relatively, I say bank, the market is still relatively bullish. It's got high lows, high highs running through this a drifting upward trend, I would suggest, more than anything else. Where to from where we are here? Well, it looked like it got a fair bit of support off of that weekly 50. When you start bringing it down into the dailies here, well, it's sort of done a Gartley pattern, to be fair. Here it may have more downside, but that's almost worked off now, that Gartley, or at least the first target of that Gartley is near enough worked off. From here we could well, it's a bit of sitting on the wall. There is the weekly pivot above, which could draw the dollar up there, and from these minutes and the comments we get out this week, well, it could drive it. It really is sitting on the wall with these markets, to be fair. So not a lot of guidance coming technically there, because it's purely the fundamentals that sit, and we're sitting there waiting. It's more erring on the bullish side though on the US dollar. Let's look at the euro then, and what we got this week. As I've said, the most important thing we've got, and there are problems that sit there at the moment. We've got Lagarde, she's speaking on Friday, and I think that is really the key thing. It'll be interesting to see. We've just got to watch out for what she has to say. And I'm sorry, I am writing with a mouse here because it won't accept my pen at the moment. I need to switch things over so it does. But so Friday is key for the euro, I believe. Not only that, it's got the Friday morning, as she's speaking, we've got some key data coming out, so which will affect it. I think the minutes are going to tell us the best part of nothing really different. But one thing that I would say is that people will be looking for her and her references to financial stimulus. If they can get some stimulus into these markets, then we got the potential of seeing some changes. At the moment, Germany's dodged a bullet in a sense of a technical recession by coming up with positive GDP data, but it's only just positive, and it's still looking, as I say, the key word is really stagnant. Looking at this market technically here, well, it's still in a reasonable downward trend, lower highs, lower lows still kicking through here. Where to here, where we've got a weekly pivot which is below, which may still draw us this week to the downside a little bit more yet. But overall, the bias is certainly bearish there. What's the big money doing? I should be bringing that in actually. I didn't show you on the US dollar, but it matters less. Let's bring this in and just show you what the big money is doing here. And it's quite interesting because the asset managers had been gradually increasing back into the euro there, but we're getting sort of to that point where it may have just tipped off. They have gone so bullish on the euro relative to anything else here that well, it might in itself might be an early move. They did move in quite early here, and we saw the euro rally. This is back here. We saw the euro rally back here, but well, maybe that is a sign that they believe that that we have seen a bottom put in a few weeks ago. So there's the possibility. So just I mean, I'm not blind to that as much as the current direction and everything else looks bearish. Maybe with this stagnation, this is the stagnation we're getting before some potential growth that comes through here. So maybe these banks are seeing things differently. I say banks, the asset managers are seeing different things differently. The leverage money is still pretty flat here and negative. It's still quite big positions negative here, minus 97,000 contracts net on from the leverage money. They're not as bullish for sure as the asset money at the moment. Okay, that's the euro. It has got some major flaws, which is still another story. Okay, the pound. The pound is technically, fundamentally, well, it's technically pushing up here in the bigger picture, potentially. But well, you could say, well, it's got low highs, lower lows, and it still hasn't broken certain factors. But it has, in the shorter term here, broken and given higher lows, and it looks like it's pushing ahead. Fundamentally, though, we sit there with that big problem of Brexit still over the head, and of course we've got the general election. The general election, the way the polls are going, which are very dangerous to watch, is suggesting that at the moment the Conservatives may have a reasonable chance of winning and having sufficient seats to give them a majority and be able to get Brexit through as planned, etc. Now the market quite likes that, because it's not going to be a no deal Brexit. It's going to be there's a deal that's been agreed. It just needs enough heads there to agree that deal, and it will go through. So that's where we are. However, it's of course it's that uncertainty, and as we move towards the vote, I think we'll see some more volatility, maybe even more quietness in here. Growth-wise, etc. Well, there's some underlying growth. It's not major, but it's good enough, and it's been good enough and outperforming some of the other countries within Europe well enough to see the bounce probably bigger than what one would have expected, particularly when there's so much uncertainty there. For now, technically then, bull flaggish sort of pattern coming through here, potential further upside, but watch out for just chop and maybe getting caught range wise until we see the outcome of that general election. Dollar yen. Now, dollar yen's a story of risk on, risk off all the time. The big money's been running to the yen. Okay, let's go towards the economics first. There's no chance of any interest changes with the dollar yen going one way or the other as it stands. It's really talk about stagnated economy. It pretty well is. It's obviously gets caught up in terms of the trade plays and everything else that's running through there, although they may have a better chance of deals, etc., with the US and coming through, but there's still the sort of knock-on effects from China. Aside of that, with Japan, well, there's not a lot there apart from the money, where the big money seems to go. When we're seeing worries, we're seeing the big money running into the US dollar, well, the yen, effectively, and you're seeing these solid downward movements when the fear is there, when the risk is off. The money's coming in. When risk is on, we're seeing the yen sold and a shove up there. So that's how we're sitting. It's trending like the risk is back on at the moment, and we've got some more. The way this weekly is going, we've got more upside. If we look at the story behind this, sorry, this was. Just make sure I've got the right currency here. This was the US, the pound rather, and you see how the situation, on the pound has changed there quite considerably. From the very negative movements we saw back in August, extreme, and this is quite a classic extreme situation here, where the markets were bottoming out around this sort of area, and then all of a sudden the big money changed its view a little bit and started pushing up, and technically we've seen that sort of rally, short-term rally. Right, let's look at this yen. So what's happening here? Well, we've seen a crossover in the money. It's going a bit more negative here, negative yen in terms of the flows, the positions are getting negative on it, which is effectively is that meaning the risk is back onto the markets and the yen will suffer. I say suffer, but sell off on that basis. And that's what we're seeing here at the moment, right the way through here, is that the money is coming out of the yen. The bigger money is starting to come out of the yen, and we are seeing we've seen that higher low confirmed there, and we could see a continued push up there. Okay, Aussie dollar now. The Aussie, it's struggling. It's they've already identified. Let's just come here. Let's just check. I've got the Aussie. Yep. They've identified the potential of further cuts, etc. The extremes of, again, it's interesting, the extremes of where we were sitting in terms of negative positions. Now, just to explain, the dealer positions here, they have to take the other side of the market. So if everyone else gets particularly bearish and the net bearish position, the dealer will be net bullish. So this bullish sort of position up here is the other side of the market being taken, and you'll see how bullish they were back here towards the lows there. In fact, the market was negative, and how that's fallen off and the market's picked up a bit, but there's still a dark cloud over there. The best thing that could happen for the Aussie dollar is, of course, a deal to be made. The central banks have signified that they're willing to take further cuts, so we could see a further cut occur. But aside of that, that really just shows that the risk that's sort of sitting there on the Australian economy. If things were to change and a proper deal gets through, well, there's already rumours that the deal's almost there, ready to sign, and if that sort of happens, well, perhaps we could see a mini rally. But as I say, it's already there, it's already discussed. It may have a lesser effect, but we need to see a full and final agreement made. That would help the Australian dollar significantly more. As a producer of commodities for that massive Chinese economy, they really are sitting there on the coattails, and it's been great whilst things have been running well for China. But on this slowdown, it's really had a knock, and it's having a knock on that Australian dollar. So it may have bottomed out here near term. We'll see what happens if things in the trade talks fall through. I can see the Aussie coming off further. As I say, any good signs on the trade talks, we'll see the Aussie bounce, but it still needs a big and a long-term solution sitting there. Canadian dollar is a bit of a disappointment to the markets. It looked a lot better than it was running. The money, though, it's got really, I mean, quite negative down here. Let me just check I've got the right one. There we are. Yep, got Canadian dollar here. Very negative from the dealer's point of view. Very bullish here, I should say. From the big money was pretty bullish on it. Wasn't really reflecting completely on well, this chart is an inverted chart anyway, but it was really sitting there quite bullish. But this is just chipping away now, and we could see further softening on the Canadian dollar. In other words, the US dollar, we will see more upside on that as we progress here. The Canadian banks have surprised people by suggesting it will potentially ease the monetary system further, and it sort of put that there, and that in turn has seen this sort of weakness coming through over the previous weeks here, and we could see a continuation of that. Oil sitting pretty flat, so that's not really coming into play. So all in all, we could see further upside in the Canadian dollar. Okay, and finally the New Zealand dollar. Now the New Zealand dollar, I'm going to come back to that sentiment chart first. I've been talking about this for a long time, several weeks ago, of how extreme we were sitting up here. Now if I do this as a maximum, so you can see all the data right the way back as far as it goes on this particular method, and you can see we're up at an all-time high, effectively, or near that period there, with the bearish a net bearish position. Now I'm just looking a little bit more at the asset managers' money as opposed to the hedges a little bit here, because it's the bigger money sitting in here. It's not massive money. Look at the positions, 31,000 positions. It's not massive. However, it's got a slight drift up. Now last week it did take a dip down. There was a wide expectation that last week that the New Zealand bank would cut interest rates in line with the Australian rates being cut previously, but it wasn't, and they're looking bullish, and they've taken this sort of quite bullish view. I think it'll be interesting watching this come Friday, Saturday, when we see these figures updated, to see if they've gone back in on more of a bullish view. But when the absolute lows were sort of coming in from the asset managers here, we were making an absolute low in this market, and it's since that point we've seen this sort of money starting to a positive push in there. Personally, I've got a net long position. I'm net long I'm more on a swing position, which I'm expecting it to push further. Would like to see this weekly 50 at least, and maybe even more. So as I say, it's more of a sort of position trade than it is a swing or a day trade. It's more looking at what's happening here and seeing if it will run up towards that, and as I say, maybe even more. At the moment though, well, that's really where we are. It's been chopping around the last 3 weeks really, but more bullish than bearish, and as I say, with that surprise come out there, it pushed it up last week, and we could see some further upside coming through. Right, that's pretty much it for me for this week. I wish you a great week. I will be back next week. Bye for now. Remember to put the old thumbs up if you like the videos, and if you like the commentary. If you need other factors covered, do let me know as well. Many thanks.